Good morning and welcome to the European crossover webinar. And yesterday ended up turning out to be a fairly quiet U.S. session, although we had seen a lot of action in the prior Asian session from the Sunday, and with the exception of the S&Ps, I mean, a lot of the majors already quiet. We had seen some moves had already transpired for the most part in the cross rates. So in the U.S. session, things were relatively quiet. Um, One of the concerns that we had was the euro coming to an area where we looked for support. We had mentioned it even when we were on the air at the European crossover yesterday, which was at 1113 area. But we didn't see very much of a bounce at all, and that opened the door for us to slide, and we did slide. Not a whole lot. We've kind of regained 111, but we're simply not doing a whole lot with it as the dollar index stays relatively firmly bid. The one is the dollar CAD. The dollar CAD has continued to slide here. Now, we did see where Canada said that they'd be open to using some of their funds or to go in and make provide some middle class support, which really we thought would have probably weakened the Canadian dollar, but actually we've seen the Canadian dollar continue to strengthen in here. The peso did go in and recover from a low that we were looking at during FACE 1982 too. We rallied off of that. We kind of quieted down. Now we kind of continue to work a little bit higher, but we know that the peso has been open to moving higher, and we had really on Sunday had jumped into a very key resistance zone between 2006 and 2011 and saw that good pair back. We're kind of working back towards that. Resistance will probably be right around this 20.01. You see that right there. Dollar yen has finally slid back a bit after rallying all the way up as much as 640. Actually, during the time we were doing the face webinar, and then kind of came off a bit, and we've been sliding since then. Also saw in the Australian dollar, we saw this going in pair back. One moment, let me just squawk kind of coming in rather loudly. One moment. Okay, so that being said, we're going to take a look as far as economic news coming out today. We did have German GDP come out earlier. We do have business climate on the French and consumer confidence that came out also a little while ago. The only thing they have coming up at the bottom of the hour is going to be UK finance mortgage applications. And let's see, we do have a peso data coming out at 7 a.m. Eastern, and jobless rate also at 7 a.m. Eastern for the peso. For those trading the peso, that'll be certainly a number to go and keep an eye on for any movement here. Monthly home prices at 9 a.m. here in the States, as well as Case-Shiller at 9 a.m. Eastern. And then at 10 a.m. Eastern, we do have Richmond Fed Index and Dallas Services at 10:30 Eastern. We did have Dallas Manufacturing yesterday, if we remember correctly. Dallas Services goes one day afterwards. And relatively slight news. China crisis on the wane. In theory, good cheer and positivity should prevail on the markets this morning, with signs that world stocks will head higher after Monday's declines and a lackluster start in Europe For one, Trump has flagged the possibility of a trade deal with China and said he believed Beijing was sincere in its desire to reach an agreement just days after the two sides slapped additional tariffs on each other's goods. Then, profits at China's industrial firms returned to growth in July, helped by public spending, and Italy seems to be on the brink of agreeing to a new coalition talks. Well, I just heard in the squawk they called off those talks right now, the 5 star. So that's just they just called them off right now as we spoke. G7 summit to prove less acrimonious overall than feared, with Trump saying the U.S. and the EU are very close to doing a deal and even agreeing to meet President Hassan Rouhani if the circumstances were correct. But the mood is actually less than ebullient. World stocks are up modestly. Asian markets are up 0.3, and after dropping 1.3% the previous day, Shanghai and Seoul rose 1% each, and Europe reversed losses on futures and is open modestly positive. Benchmark 10-year Treasury yields pulled back from a 3-year low at 1.44, reached on Monday, and then Italian yields already down 10 basis points to low since October 16 at just 1.25%. However, there are signs that all is not well. Sterling remains under the cosh, having weakened 0.5% yesterday as the last vestiges of hope for a Brexit deal seem to be evaporating. Well, actually, sterling is actually rallying right now, somewhat. And in a reminder of the trade war that's still raging, the onshore yuan nudged down a fresh 11-year low at 7.1566 per dollar, extending its August slide to around 3.6%. The dollar rose 0.5% on Monday, retreating 12 tenths, while the yen has risen 0.5% in the sign that risk aversion remains. Yields on German and U.S. debt are down likewise, and the U.S. 2-10-year curve remains inverted. U.S. 210 remains inverted. And the yen rose on Tuesday as some investors tempered their optimism about the chance of a quick resolution to the U.S.-China trade war, which boosted so-called risk-off trades. Global markets are whipsawed by dramatic twists in the trade dispute this month. U.S. President Trump only flagged the possibility of a trade deal with China. The dollar came under additional pressure versus the yen and decline in treasury yields. The currency markets also took some relief from a stronger than expected daily yuan fixing, while Washington and Beijing have shown a willingness to return to the negotiating table to resolve their trade row. There are lingering concerns about a lack of clear path towards resolving a dispute that has dragged on for more than a year, and global growth, corporate profits, and investments have been hurt. The dollar rallied overnight due to optimism about a trade deal, but there's a sense that the market has gotten a little ahead of itself, said Junichi Ishikawa. Some traders can book a little profit here. There are still so many issues that can trigger a clash between the U.S. and China. The yen tends to need to be bought in times of economic uncertainty, and also rose about 0.6. The dollar index measuring the greenback against the basket of currencies was a little change at 98.01. Speaking at the sidelines of the G7 summit, President Trump said China's officials contacted. This is all a bunch of BS. We found out that that's a lie here. It was even stated, I don't know if you saw it in the Asian session. Then Forex Live, you could tweet it. Just another lie. However, some doubts have crept in the market as Chinese foreign minister spokesman said he had not heard that a phone call between the two sides had taken place. Yeah, and that was actually, there was some additional notes there. I think the vice premier and somebody else had said, no, there's no phone calls whatsoever. And we've seen this come from Trump a lot, where he just makes up stuff on the fly. So I almost tweeted myself last night in Asia. I go, so this move in the S&P is all based on a bunch of BS about there were phone calls. Even Forex Live retweeted, made a little bit of a joke about it too. I was quite surprised with the big gains in the dollar yen overnight, but it's unclear what the U.S. and China will do next, and I would expect the dollar to consolidate for the time being, said Kiyosuke Suzuki. So let's just go on and move into the charts. So we are seeing the cable move up. And I said I thought it was rallying, but I mean, it's up, 40 pips from where we were just a few moments ago. And you can see here that we're just barely hanging above 111 here on the euro. So let's just go on and take a look at where we stand here. Pull up the euro. Well, one of the things that we talked about at the beginning of the week was when we said euro saw a nice rebound rally from the week's lows, but at the end of the day was incapable of closing above the key level 1154. Bulls will look to buy dips to 1113, which we did yesterday, 1113. I got out with minimal profits, and I didn't decide to come back again, even though we popped up about 5 or 7 ticks off of pips off lows, but ultimately, which is my concern, we slid a lot below 111. I said, look, as long as we can hold above 1097, we'll be okay. I think we got as those 1094 or something, and we popped up above. Now this morning we're moving a little bit high, but we're still having a difficult time. And the concern is that unless we could have gotten above this area, this 1154, which could have at least unleashed some additional short covering. Right now, bears are still in control. They haven't been taken out of their positions for the most part here. I mean, right here, the same way that I was looking to be a buyer last week, and I said, look, if it got below 1020, this give you a pretty good little loss. So I I would exit then at that point if it was going to close below that. Well, it didn't. Well, the same thing here, not in the sense so, because bears have been in control all along. But the thing is we haven't gotten past a level to trigger, because you can see on this pink line, you see how it's catching all these little highs right in here. So, or even from the wicks here. So that's why that was a good area to look at, and we weren't able to get past that on a closed basis. And without that, it puts the shorts in control, or keeps shorts still in control. And we did go on and fade on the Sunday session from that area. But the key thing is that look, as long as we remain this low, we're gonna have to move much higher before something can really materialize here. Now, when we look here with the euro, so we're gonna put the resistance here at 1160. Because anything here, you get a rally up to, let's say, 1035, whatever, you can easily just start to slide right back down. The real resistance is going to come in at 1160. There's no getting around that. So, moment. Support's going to come in right there at, call it 1078. We get much past that, then the market's just going to look to give back all those gains. Right now, it's not looking too well at this now. We actually just need a catalyst to go and boost us up. We'll have to see what that catalyst is, but we certainly need it. Let's move into cable. Let's go and take a look here on the 2-hour chart. And cable tends to be faring a bit better here, obviously, than euro. We'll put the support here at this 2203. Now you can see the resistance level we had up here, 23.24, but we need to be able to kick beyond that, and that kick beyond that. To kick off those stops is going to be 22.88. Things are moving up a little bit, but at the end of the day, it's still very bearish. But we're looking for this 22. That allows us to kick off some stops. We're looking yesterday. We're looking here in this area, this 23.24, which actually confluences here with 23.37, which is the 23% of the move back from 2015 to 33.83. So, be a pretty good resistance level coming in right here for starters. But we need to get past this 22.88 to kick something off. Well, we're stuck in a very tight range here with the Aussie dollar, and it really does look like it's going to be open for the market to pare back lower. Take a look at we stand here on the 2-hour chart. The dollar itself is going to have to take a wholesale pullback in order to generate some steam on the upside. We're actually going to go and have the support come in right there, which is going to be 67.26. And on the upside, it's going to be right there at 67.98. Now let's go move into the Kiwi. This looks hell-bent to go lower with the talks of even lower rates, and we saw that in the Asian session. Last bastion of hope is going to be right there at 63.50, which isn't even this here. I'm just going to put it right there for 63.40. And on the upside, we'll keep that at 64.06. 64.06. Looking here with the Canadian dollar, it has gone and continued to slide back a bit here after, we saw this challenge up here, and the market was having a little bit of a difficult time trying to sustain those gains. We had one more last gasp up here at 33.36, and we've since pared back, even getting beyond the 32.54. But we have come into this old resistance or old support level of 32.36. But we're going to give it just a little bit of room to move lower, which would come in right there, 32.28, 32.28. Just about made it through. And 32.20 would actually be the 38% right there. Let's go with that for support, 32.20. And resistance will come in right there, 32.69. 32, we'll give it just a little bit of room. You see right there, 32.74. $32.74. There we go. Now let's go into the dollar peso. So we saw the move in the Asian session. We took us into the zone of 2006 to 2011. Looking here on we'll move into the 2-hour chart. We're going to actually look here for the day's resistance. Right here at 20.01. And actually, if we do see risk aversion come back, we can actually get beyond that. We're actually going to give it a little bit of more extra room here. $20.05. And support is going to be right there at 1987.5. Let's call it 1988. And the yen's been a bit all over the place after we tested the flash crash lows in the Asian session on Sunday. Quickly came back and even saw this quick boost up here during the face webinar, only to slide quickly back, kind of make another return back, and then kind of ease back. We're a bit all over the place, but we're going to go with the support. It's going to be 552. Let's call it 551. 551. Resistance is going to be right there at 619. Just a bit higher, 620, 620. We're still hanging around here with this cash style index. Obviously, a lot stronger support here, a resistance level here at 98.20. I'm just not sure that's really going to make that move. The challenge would be to come right back up here to this 98.09. I'll tell you what, we'll go back with this. We're going to go with this, which is going to be 98.18. Did get that UK data just come out right now. Finance loans for housing, 43.3K versus 42.9K. Prior revised from 42.7K. Not a whole lot of movement here in the cable. Let's go and move back in here into the dollar. It's going to be 98.18. And support. Let's go right here with 97.64 right there. As Blake had mentioned on Face, he was thinking that the rest of the week would be relatively quiet. And I think that just may be the case also. So we may see a little bit of back and forth, but the only thing is this is really a key area here for the euro. If the euro does slide, it's really going to continue to slide as anybody that was bullish is just going to throw in the towel if we slide. If we go beyond 1090, I would have to think that you'll get a flurry of stops, if nothing else, but just exit out anyone that was long. But we shall see. But let's go move into the cross rates. Well, you can clearly see the key level right here, and that's going to come in at 67.15 for support. And on the upside, it might be a stretch here. We'll go right there. It's going to be 67.62. Well, there we have it right there. We had 63, so we keep that. And let's go with the euro yen. Come in just right here with this support. Let's go on and move this down here. Right there. And almost triggered it, which is going to be 17.18. Our bias chart and support ended up holding right there, but I'd like to move this a little bit lower. Bias support was 17.26 and the low was what? 17.21. There's a good resistance level, but if we do make a move, we pop some stops, it'd be 17.77. right there, 1777. Same thing here, pretty close we have right there. And let's move in with the euro wad. Now, with the Aussie, looking like it's going to start to slide back again. And boy, did we have a tumultuous run in the Sunday session, only to give a lot of it right back um, as the euro weakened and the AUD was strengthening at the time. We're going to go. Let's see here. Yeah, let's go right here. Should see some good volume there, which would be 65.04 on the upside. Support now is going to be right there. We'll call it 64 even. That was a pretty good pop. It cleaned out a lot of people. You can see the angle come down here, and the market was just meandering. Once we get Gusto stopped, we took another round. Then turned around and gave it all back. Important that they hold here. I'll actually just draw that here. Came back to retest. And this would be the logical area for them to make a run to 65.04. And let's go into the Euro QE. This is going to remain right here with the resistance coming in at 74.77. 78, that's fine. And support here, right here at 74 cents. So no change here. And let's go into the ASEAN. Okay, the support's going to be 7109. And resistance will stay the same right here at the 7181. Got 83, just a couple of notches lower, but and that with that we'll move into the guppy. It's almost as if we're stuck in no man's land here. Cable has been strengthening, or sturdy, I should say, has been strengthening a bit. We're still going to go, we'll lower this here. Just going to be 29.88. The downside support coming right there. 28.65. Bit of a widespread. I guess so, because especially since sterling's holding up relatively well. We're going to go right there at those lows. Actually, just a hair higher right there. 29.06. And let's go with sterling on. This is another pair with, a pretty big response and then a sell-off the same way we saw with the euro odd, to no surprise. Support comes in right here, obviously. And resistance. %, and look at that, comes right across this line to 81.78. Go right there with 81.74. 81.74. Support comes in there at 80.57. That may be a little bit low right here. Let's go right there. 80.62. 80.62. And take a look here with the bunds. Bunds are just relative. They're hanging, in a sense, relatively quiet. They look like they want to go in and take one more roll down here. Gold, same thing, holding up here reasonably well here at 1531. There was a potential that we could slide back even further. We'll see what happens with the dollar. The dollar itself, and look at 10-year yields, just gently trying to work a little bit higher, the same way that Bund prices, the futures are actually looking like they want to roll down. Obviously, inversely with Bund yields would be moving higher. Taking it back into the main screen. We need a catalyst to drive this euro higher. The dollar's just kind of hanging around here. But if we do start to slide here, it's really going to open the door for us to give back a lot of those gains that we saw on Friday. Not that we already haven't already here with the euro. So there is a chance we can go and move a little bit higher. But once again, bears still remain in full control unless we can get above. We need a daily close above 1154. So can we bounce up? Yeah, we can bounce up. There might be better areas to go and keep an eye on with the euro because it's susceptible if we do start to slide back. Now, it did get below 11 and it wasn't able to sustain action below that. So maybe that will allow us to move higher. But once again, if you were to go and take a long on this, now would be the time as opposed to waiting for any. I would definitely wouldn't wait for confirmation. But my concern is, like I said, you can move up to 1135 and this market could quickly give that back because bears still remain in control. Cable after its run has just gotten relatively quiet despite the home finance loan data that came out at the bottom of the hour. No real movement off of that. The yen, same thing here, sitting quiet. It reminds me of what Blake was saying, that he thought that this week could be relatively quiet, or we wouldn't see any big moves. We already had the big moves from Friday and then Sunday session. We may see bounces around. I think there may be other pairs, whether it be like we can see right here with the Mexican, the dollar peso, which is higher. Although I think we can make it up to 20.05 before we see any real resistance. But once again, if we do start to slide with some risk aversion, we can see this move higher. The S&Ps are at 2870. They're not that far off where they were, but they're still buying into this thing that maybe they might be able to get something done, apparently. But that's where we stand here. Once again, with the euro, we can push a little bit higher, but if you were to take a position, I'd be taking it now as opposed to waiting for any confirmation because, once again, without a daily close above 1154, bears still remain firmly in control. That's all we have for the European crossover, and we will catch you later in today. Thanks for joining us.